Hey everyone, welcome back. We're going to be taking a deep dive today into CESC Ltd and their latest quarterly financials.
Ooh, fun.
It should be interesting.
Okay.
We've got their press release, obviously. We've got the auditor's review, an investor update. And for some reason, we've got their insider trading policy document.
Interesting.
I don't know why that was in the stack of stuff they sent over, but we'll take a look at it. So I guess the idea here is not to just, look at the numbers, but to try to figure out like what their strategy is and what this means for the future. What their position is.
Yeah, like using all these different pieces of information, we can kind of paint a bigger picture of what's going on.
Exactly. Yeah. So one of the first things that jumped out at me was this kind of contrast between the revenue and profit numbers.
Oh, yeah.
So in the consolidated report, which, includes all their subsidiaries, it looks really good. Revenue's up like 10.4%, which is a good chunk. That gets you to 13,345 crores.
That's great.
And profit after tax is also up to 1,043 crores.
Whoa.
But then if you look at just CESC Limited itself, like standalone without the subsidiaries,
Right.
their profit's actually down for the quarter
Oh.
by like 6.3%.
Hmm.
Now, it's important to note that for the 9-month period, it's still up 1.1%.
Okay.
But for the quarter, it was down, which is kind of interesting.
Yeah, that is interesting that the whole company's doing better than one of the parts. So what's driving that, I wonder?
Yeah, I don't know. That's the question that popped into my head, too. Is it something to be concerned about? Or is there some sort of, strategic reason for that?
Well, I think to understand that we need to take into account the regulatory environment that CESC is operating in.
Oh, right, yeah.
Because they get a lot of what's called regulatory income.
Mm-hmm.
And, they operate in a pretty heavily regulated market.
Right.
And what's interesting is that the regulatory income is kind of jumping up and down all over the place.
Yeah, it's like all over the place in these reports. Like in some places it's up, in other places it's down. What does that actually mean, though, in like practical terms?
Well, I think it means that the regulatory environment that they're dealing with is kind of in flux.
Unstable.
Yeah, a little bit unpredictable.
Mm.
And I think there have been some changes to fuel costs and things that are affecting it, too.
Oh, right, because they actually highlight in the reports that they've had to make adjustments due to these new regulations.
Exactly.
So it's like they're constantly having to adjust their operations based on what the regulators are doing.
Yeah, like a dance.
Yeah. And of course, that affects their bottom line.
For sure. And, it really highlights that it's important to not just look at the overall revenue or even the profit figures, but to really dig into the details.
Yeah, definitely. Okay, so moving on, let's look at some of the operational highlights from these reports. One thing that jumped out at me was that their Kolkata distribution business seems to be doing pretty well. Yeah, they've started to recover the fuel and power purchase adjustment surcharge.
Oh, okay.
And they're seeing good demand growth in that area.
Yeah, they reported over 4.4% year-on-year growth in Kolkata, which is pretty good.
Wow, yeah.
Shows you the economy is growing.
Yeah, for sure. And then they highlighted their Haldia power plant, which achieved a 91% PLF for the quarter.
Now, I don't know about you, but I'm not a power plant engineer. So
Yeah,
can you
yeah.
explain what that means and why that's significant?
Sure. So PLF stands for plant load factor, and basically it just measures how efficiently the power plant is operating. So like a PLF of 100% means they're running at max capacity all the time.
Oh, okay.
So 91 is pretty good. It means they're maximizing their output, and that generally means more profit.
Gotcha. Okay. And it seems like their Chandrapur power plant is doing well, too. They're benefiting from some long-term contracts, and the energy market's, kind of working in their favor right now.
Yeah. But there's one area in particular that I'm really excited to dig into, and that's their plans for renewable energy.
Yes.
So they actually lay out some pretty ambitious plans in their investor update. They're aiming for 3.2 GGW of hybrid renewable energy projects over the next 3 years.
Wow.
Which is huge. That's a massive jump, particularly considering they've been primarily focused on, traditional thermal power in the past.
Right.
So, what's driving this like really big shift towards renewables?
Well, I think there are a couple of major factors. First of all, the demand for power in India is just skyrocketing.
Yeah.
The economy's growing. People are, moving into the middle class. They're buying more appliances. They're using more energy. And then you've got things like electric vehicles and data centers,
Oh, right.
which are just, putting enormous pressure on the grid.
Yeah, and then you've got the whole push for cleaner energy sources,
Yeah,
right?
exactly. India is trying to reduce its carbon footprint, And they've set some pretty ambitious targets for green hydrogen production, which of course relies on renewable energy.
Right. So it seems like CESC is trying to position itself to, you know, be a leader in this transition.
Yeah, they're definitely not just talking about it. They're actually putting their money where their mouth is.
Yeah.
They've already got 1,200 millicurie of renewable energy projects that are underway across different states.
Really?
Yeah, and they've already got power purchase agreements in place, and they're projecting an annual revenue of 1,200 crores from these projects alone.
Wow. Okay. So that's a pretty clear signal that they're serious about this. But of course, anytime a company makes a big shift in strategy like this, there are always risks and challenges,
I'm
right?
sure.
So what are some of the potential downsides to this, aggressive push into renewables?
Well, one thing to consider is that the renewable energy market is inherently volatile.
Oh, right. Yeah.
The cost of solar panels, wind turbines, and other key components can fluctuate a lot, which could impact their profitability.
Yeah, that makes sense.
And then there are always challenges with integrating renewable energy sources into the existing power grid because they can be intermittent and less predictable than traditional thermal power.
Right. Right. And then what about the whole political and regulatory landscape? I mean, what happens if the government suddenly changes its policies regarding renewable energy subsidies?
Yeah, or introduces new regulations.
Mm.
There are a lot of external factors that could really throw a wrench in their plans.
Definitely. So it sounds like they're making a pretty big bet on the future of renewable energy.
Huge bet.
But it's not without its risks.
No, not at all. It'll be interesting to see how it all plays out.
Yeah, for sure. Now, speaking of big moves, they also recently won a bid to acquire a 100% stake in the Chandigarh Power Distribution Company,
Oh, wow.
which is a pretty significant expansion of their distribution network, right?
Absolutely.
So it seems like they're not just focused on generating cleaner energy, but also on how that energy gets to consumers.
Yeah, it's a smart move. They're thinking about the whole energy value chain.
Right. So all in all, it seems like CESC is undergoing a pretty major transformation. They're moving from a traditional power company to a more diversified, energy solutions provider. They're betting big on renewables, expanding their distribution network, and they're clearly aiming for a leadership position in India's, rapidly evolving energy market.
Absolutely, I agree.
But before we get too carried away, I think we need to look at one more document in this stack, which might seem a little dry at first glance, but I think it's actually really insightful.
Oh, really? What's that?
It's their insider trading prohibition code.
Oh, okay.
I know it doesn't exactly sound like a thriller,
No,
but I think it actually tells us a lot about their internal culture and their approach to risk management.
it's interesting. Okay, I'm intrigued.
So, when I first looked at this document, I have to admit I was expecting it to be, pretty standard legalese.
Right.
But it's actually incredibly detailed and thorough.
Yep.
It goes way beyond just the basic, legal requirements. They've outlined all these specific procedures and controls to prevent insider trading and make sure they're in compliance with, all the regulations.
Well, they're really taking it seriously,
Yeah, it's not just a box-ticking exercise for them. They're actually putting in the effort to create a culture of transparency and ethical conduct.
which is really important, especially given all the changes and strategic initiatives they're undertaking right now.
Right. I mean, with mergers and acquisitions and big investments in renewables, there's a lot of sensitive information flying around.
Absolutely.
And that creates opportunities for insider trading.
Absolutely.
So by putting these really robust controls in place and promoting a strong compliance culture, they're basically demonstrating their commitment to fairness and protecting the interests of all their stakeholders, including investors.
Right. Yeah.
I actually noticed they even have a section on Chinese walls procedures.
Chinese walls.
Yeah, it sounds kind of like something out of a spy movie, right?
A little bit.
Yeah. But basically what it means is they've set up these information barriers
Okay.
to prevent confidential information from flowing between different departments.
Wow, that makes sense.
Yeah. So, for example, somebody who's working on the Chandigarh acquisition
Right.
wouldn't have access to the same information as someone who's, involved in the renewable energy projects.
Right.
So it's all about minimizing the risk of, sensitive information being misused or leaked out.
Smart.
Yeah. And then they're also really strict about trading windows. So during these, closed periods, no one in the company, even senior executives, are allowed to trade CESC stock.
Wow.
And even when the trading window is open, there's a pre-clearance process.
Oh, really?
So anyone who wants to buy or sell shares has to get approval from the compliance officer.
That's pretty intense.
Yeah, they're definitely going above and beyond the minimum requirements to make sure everything is done by the book. And they even have a whistleblower protection policy in place to encourage employees to, report any suspicious activity without fear of retaliation.
Oh, that's good.
Yeah, it shows that they're really serious about creating an environment where people can raise ethical concerns without, being afraid of what's going to happen to them.
Definitely. That's great.
So, this insider trading policy document might not be as flashy as the financial reports or the investor updates,
Right.
but it actually tells us a lot about CESC's values and their commitment to operating with integrity.
Absolutely. And in the long run, that can be just as important as their financial performance.
Yeah, exactly. So we've covered a lot of ground already. We've looked at their financial performance, their ambitious plans for renewable energy, their
Okay.
strategic acquisitions, and now even their internal compliance
Oh,
policies.
yeah.
And it's clear that this is a company that's undergoing a pretty significant transformation, one that's full of potential, but also, has its fair share of
For
challenges.
sure. And that leads to a very important question for our listener.
Yeah.
What does all of this mean for investors?
Yeah, that's a great question. What does it mean if you're thinking about putting your money into CESC?
Exactly. So that's where we'll pick up in part 2 of our deep dive. We'll analyze all of this from an investor's perspective, weighing the potential risks and rewards of CESC's very bold strategy.
So stay tuned.
Welcome back to our deep dive into CESC Limited. So when we left off, we were talking about all the changes happening at CESC and what those might mean for investors.
Yeah, we saw the big revenue growth, those interesting profit numbers, the push into renewables, and that big acquisition in Chandigarh.
Right. Lots to unpack there.
Yeah, definitely. So let's put on our investor hats here for a minute and really try to understand the risks and the rewards that come with CESC's, current strategy.
Okay, so starting with the potential rewards, it seems like CESC is putting themselves right at the front of India's energy market, which is growing like crazy and changing all the time.
Right.
Their move into renewables is smart.
Mhm.
It lines up with what India wants to do, and it's part of a global trend. So there's a lot of potential there for growth and big returns.
Yeah, and expanding into distribution with that Chandigarh acquisition also seems like a really good move.
Totally. They're not just making the power, they're controlling how it gets to people.
Yeah, it gives them more stability. They're not just relying on one part of the market.
Exactly. Diversification is key.
But we have to talk about the risks too, right? We already mentioned how the renewable energy market can be unpredictable and how hard it is to integrate renewables into the grid.
Right. And there's always the chance that government policies could change.
Yeah, exactly. Are there any other red flags that investors should be thinking about?
One thing is that they've got these really ambitious plans, but actually doing all of that is going to be complicated.
Yeah.
Think about it. They have to get the land, the permits, manage all the construction, negotiate those power purchase agreements.
Right.
It's easy for costs to go up or for projects to get delayed.
And they're not the only ones doing this right. There are other big energy companies that are also moving into renewables, so there's competition.
Oh, yeah. They're going to have to figure out how to stand out. And they can't just assume that what works today is going to work tomorrow.
Yeah.
Technology changes so fast.
Right. It really seems like the big question for investors is, can CESC actually pull this off? Can they handle these challenges and make the most of these opportunities?
Yeah, it's kind of a gamble.
But a potentially big payoff.
Right, exactly. And remember, investing is always about balancing risk and reward,
Yeah.
you know?
Right. And that's where that really thorough insider trading policy we talked about comes in. I think it's a good sign that they're being so careful about compliance and transparency.
Totally. It shows they want to do things the right way, and that's reassuring for investors.
Yeah, it builds trust for sure. So going back to those profit numbers for a second, that difference between the standalone performance and the consolidated results, does that worry you at all from an investor's perspective?
It's something to watch, for sure. It's great that the whole group is doing well, but that little dip in profit for CESC Limited itself does make you wonder.
Yeah, like are they maybe putting more focus on the subsidiaries and not enough on the main company?
It could be. It could be that they were just moving resources around strategically, or it could be a sign of something more serious.
So investors need to dig a little deeper, figure out what's really going on.
Exactly. Don't just look at the big numbers. You got to look under the hood.
Right, look at all the details.
Yeah.
But, even beyond the pure financial side of things, it's interesting to think about the bigger picture here.
What do you mean?
Well, CESC is playing a pretty important role in shaping India's energy future, right?
Oh, yeah, for sure.
their investments in renewables, their expansion into distribution, it's all part of this bigger story.
It's not just about them. They're part of this whole ecosystem with government policies and technology and global markets.
Right, and the decisions they make can have a really big impact.
Ah,
I mean, think about it. Their push for renewables could really speed up India's move towards cleaner energy, which would be huge for the environment and for their energy independence.
and if they do distribution, right, they could bring reliable power to communities that don't have it, which would be huge for economic development.
Exactly. It's exciting to think about, but we also have to be realistic, you know?
What do you mean?
Well, what if those renewable energy projects run into problems, delays, cost overruns?
Right.
That could hurt them financially, and they not be able to do all the things they're planning.
And there are social and environmental impacts to think about, too. Large-scale projects can disrupt communities and ecosystems.
Yeah, so even though CESC's goals are good, we have to remember that there can be unintended consequences.
It's a tough balance.
Definitely. And in the end, it's up to each investor to decide if they think CESC is on the right track and if they're comfortable with the risks involved.
Exactly. It's about doing your homework and making an informed decision.
So we've covered a lot. We've looked at CESC's financials, their strategy,
Yeah.
the bigger picture, and even some of the ethical considerations.
Yeah, we've really dug deep.
But I want to leave our listener with one final thought. So we've talked about how CESC is going all in on renewables, but is that really a sure thing?
Well, that's the million-dollar question, isn't it?
I mean, the energy market's always changing,
Always.
and it's not exactly easy to just plug all these renewable sources into the grid,
Yeah, it's a huge challenge. And the whole global energy picture is shifting, too.
Right. Like, what if solar panels suddenly become super expensive?
Exactly. Or what if someone figures out nuclear fusion? You know,
Oh, yeah.
game changer.
And then there's the government. What if they change their mind about those renewable energy subsidies?
Oh, yeah. Policies can flip on a dime. It's a lot of risk.
Yeah, so CESC can make all the plans they want,
Right.
but they can't control everything.
Nope. It's a gamble,
Hmm.
but it seems like they're okay with that.
I guess so. And that's what makes this whole thing so interesting, right?
Totally.
It's like they're not just going along with the changes. They're trying to make the changes happen.
They want to be in the driver's seat.
Exactly. Yeah, it's a pretty bold vision. I'm really curious to see what happens.
I too. I bet we'll be talking about CESC again on a future deep dive.
Oh, for sure. Yeah. Well, there you have it. We've gone through all the ups and downs of CESC Limited's quarterly results. We
Right.
looked at the numbers, the strategies, everything.
We even got into the nitty-gritty of their compliance policies.
Oh, yeah, that was fun.
I think our listener probably has a much better sense of the company now.
Yeah, they're definitely not a simple company.
No kidding. Lots of moving parts.
But this is just one moment in time, right?
Exactly. A snapshot.
The energy world is changing constantly, so CESC is going to have to keep adapting if they want to stay ahead.
They can't stand still.
Nope, they got to
No.
keep moving, so yeah, keep an eye on them. Their story's definitely not over.
Not even close.
All right, well, that's it for today's deep dive. Thanks for joining us.
It's been a pleasure.
And we'll see you next time for another deep dive into something fascinating. Until then, keep learning, keep questioning, and keep diving deep.